should a business owner know, and I have here like the step-by-step checklist of a small business, okay? Actually, that's the first question a lot of my mentoring clients, when they come to me to make a transition from job to business, they ask me, should I enroll a company? Should I do something else? Like in Cyprus, we have the commercial name, which I had for many years. So I know I didn't enroll a company from the start, and I know I enrolled one company too early with a partner many years ago in Greece. And that was a mistake. That wasn't necessary. So I lost some money there. So there was somebody who wanted to start a business in Cyprus, found my agency, got me to enroll the company, a lot of expenses. So step-by-step process for somebody just starting out first.
First, it's very important to understand that the company is its own legal entity. So a company is something different from the person who is setting it up. A company has several obligations towards the authorities, and there are many things that need to take place as it is an independent legal entity. So you need to hire an accountant because this company needs to prepare its VAT returns, its accounting records, and its audited financial statement at the end of each year. So it's something, it's a process basically that is required by the local regulators. So it's very important for the person who wants to decide whether or not to set up a company or not to understand this, that the company, it's an independent
legal entity.
Totally.
And this is what I didn't understand in the beginning. So when you get in trouble, you get, when you operate as a person, you get in person in trouble.
Of course.
But the company can't get in trouble separately as a legal entity.
So once we understand that the company is a standalone vehicle, then there are three pillars that anyone should consider before setting up, before deciding whether to trade as a person, and we call them sole traders, or create their company where they will trade as a company. The first pillar is the taxation. The company has a fixed tax rate at 12.5%.
In Cyprus?
In Cyprus. Yeah, we're talking about Cyprus companies, unless you want me to talk about international companies, but
if anyone has a question about international versus Cyprus, type it in because Kyriakos has knowledge. If he has for the specific country, he will advise you.
We're talking about Cyprus companies. So the first pillar that someone needs to decide to consider is a taxation. If you're trading under a company, on the profits of your Cyprus company, you will be taxed 12.5%. If you're not Cypriot and you haven't been living in Cyprus, your dividends will be tax-free. So the international people who set up companies in Cyprus, they're a bit more privileged than people like ourselves because they have a special tax status as far as their dividends is concerned. So it makes perfect sense to have a company because the taxes are only 12.5% and not on turnover, but on the bottom line profits. At this point, it's important to stress that our tax system is quite flexible with what is allowable as a business expense. Now, the other thing to consider is that if a sole trader, so if someone decides not to create a company, they will be taxed on their profits based on the payroll taxes, which is much higher. So the tax starts with 20%, 25, 30, and 35% for profits exceeding 60,000, not turnover.
60,000.
Yes, not turnover, profits.
So when is it it makes sense to start a company? How much money should you be making? To make sense to start a company?
It's not as simple as that. So, as I said, the one pillar that someone needs to consider is the taxation. Company 12.5, individual starts from after the tax-free amount of 19,500.
So we have a tax-free in Cyprus if you are an individual, 19,500 euro.
There on you have 20%, 25%, 30%. Over and above. There are brackets which we can provide at any stage. So this is one criteria. The other criteria is the legal aspect of your business. So it's not a matter of creating a company just to pay less taxes. This is a common mistake, Pavlina, that most people do because they want to avoid the cost of creating a company and maybe the cost of hiring chartered accountants to prepare their tax returns, their VAT returns, and their audited financial statements. It's very important to understand that a company will protect you against third parties. So, for instance, if your business is risky, if you have contractors in tall buildings, or even if you're a professional who gives advice about millions or hundreds of thousands and you have a great responsibility towards your clients, you need to be protected. I mean, people choose willing, I don't know, people don't take this enough, they don't onboard this very important point that you need to be protected. And the way to be protected is by having a company, which limits your exposure. So, and the third point, of course, that someone needs to consider is the turnover, because after more than 70,000 worth of turnover, you are required to do audited financial statements. So whether you're a company or a sole trader, if your turnover exceeds 70,000, anyway, you need to hire a professional accountant.
I didn't know that.
Yes. So it's a matter of taxes, it's a matter of turnover, and it's a matter of liability. Maybe your business has lots of employees. If you have employees, by nature, you are responsible for them. If they get injured at the workplace, or if an accident happens, they will be suing you personally and not your company. So you will be exposed as a person, as Pavlina Babalouga or Kyriakos Tramountanellis, to the courts by your employees and not the company. So the company is this veil of incorporation. It protects you from all this. So it's not a numerical exercise whether or not to set up a company. It's a step further than that.
What I advise my clients who are just starting out is you need to have a good accountant anyway. And I stress good accountant, like find somebody who really knows to advise you. And that's why we brought you here, because they will tell you all sorts of different things. Different accountants, and
you need to understand this is a business. Accountants may want to sell companies to make quick, fast profits, or they know that the company has more filing obligations and more routine work than a sole trader. So it's more work for the accountants. So maybe most accountants might be tempting to sell more companies to potential clients instead of correctly advising them on a balanced decision. I mean, ultimately, is a business person.
I think ideal is to have like your accountant, you go have a meeting with him, maybe monthly, and what do you advise? Like a monthly meeting or Zoom or?
After the first 2 sessions, it's clear what you need to establish. And it also depends on your dreams and goals. If you want to start, if your turnover is between 50,000 and 70,000, or your expectations are not more than 100,000, so you're borderline on whether or not it's worth having a company or trading on your own. Because expectations, as you know, in real life, we usually get lower results than expected. So it's a gradual step. Also, it's important to note that companies are more prestigious than trading as a sole trader. So if you go to your prospect clients or prospect suppliers, they will see you differently if your invoices or if your brand name is limited. It shows that you're bigger than the name and your surname with your personal tax identification number. So it's also a prestigious matter. And lastly, Pavlina, some funding schemes available either by the government or from a special department of the government, they only apply to companies. So if you're a sole trader, you might not be eligible to absorb funds from the government.
So
these are the parameters, I think, that someone needs to take into consideration.
Yeah, I mean, when you have your meeting with your accountant and you give him all the data, he will be able.
Of course, the client will decide what's suitable for them.
Yes, but the good accountant, will actually tell you the right steps to take at that point, and then when they see that, oh, your income this year is lower or more, they will advise you on the next step.
Maybe you are ready to make the transition.
A good accountant is your financial advisor.
Of course.
And they can help you avoid many mistakes on many levels of the business, right? You're acting as a financial advisor as well.
Basically, we protect our clients against, obviously, tax obligations, against filing penalties, but this is a given. I mean, this is our day-to-day operation. Further than that, we try to understand their business model. We review their business model. If it doesn't make sense, we try to adjust it if they listen to us in a way so that it's profitable, with main focus on cash flow and profitability, as well as a horizon of 3 to 5 years, because we need to see that our clients take the necessary steps to achieve their goals.